Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, it was an extremely range-bound session. We had both the Nifty and Sensex trading in a very narrow range. Any attempts to reclaim that 24,200 were fruitless. The high point of the day was 24,196, but we ended somewhere around that 24,143 mark, once again below that crucial 24,150 mark. But of course, the underperformance came in from the broader markets once again today. The mid-cap index was down 0.6%. Even the small-cap index was down somewhere around 0.6% or thereabouts. Sectorally, of course, it was the metal pack that took the biggest hit. Of course, after the Supreme Court, verdict on how states are now allowed to collect past dues in the form of royalty and taxes retrospectively. Like that came as a big blow, and we saw the Nifty metal pack taking a sharp knock, but then it ended lower by about 1.5% or thereabouts. IT was the pocket that did well today. 4 out of 5 top Nifty gainers are from the IT pack. In terms of the NSE advanced decline ratio, the breadth that was in favor of declines today. 1:2, that was the advanced decline ratio on the NSE. 855 advances to 1543 declines. That was the kind of breadth. Even the India volatility index, cooled off significantly, another 5% cool off coming in there below that crucial level of 16. Mind you, it was weekly expiry for the Nifty and the Nifty Bank index as well. The Nifty Bank index, of course, ended in the red. Continues to be under that 50,000 mark, 49,700. That's the kind of level that we saw on the Nifty Bank index. Barring the IT pack, all the sectors were in the red. Of course, metals emerging as the biggest laggards. In terms of individual movers, as I was mentioning, 4 out of 5 Nifty gainers were from the IT pack. So TCS, HCL Tech, Infosys, Tech Mahindra, all of these were the top gainers. ONGC, I beg your pardon, that was on the losing end. BPCL was once again on the gaining end, and so was LTI Mindtree from the IT pack. In terms of losers, we had Divi's Laboratories, the Kotak Institutional cutting EPS sharply. The stock was reacting to that, down somewhere around 5% or thereabouts, if I'm not mistaken. It was down, yeah, exactly, 4% down for that one. Aside of that, you had Hero MotoCorp on the back of earnings disappointment. That stock was among the laggards. Coal India, ONGC and UltraTech Cement, those were the other losers. From the broader end of the markets, very quickly, SL Propack, that stock was a high flyer today. Top Nifty 500 gainer. You had Chennai Petro, PB Fintech, Uno Minda. These were some of the other gainers. On the losing end, you had Piramal Enterprises. That stock post numbers tanked somewhere around 10%. HEG, NMDC, BEML and Mahindra Holidays. Those were some of the other movers. But on that note, let's get on board our guest for the afternoon. Joining me is Kranti Bathini, who is the equity strategist at Wealth Mill Securities. Kranti, great to have you on the show. Before I delve deeper into sectors, most of the triggers are out of the way, right? You had the budget, that's out of the way. Earnings season has pretty much concluded. Even macro data, we had the inflation and IIP data coming out. So most of the local factors are out of the way. Of course, there was turbulence in terms of global landscape. And now the next big cue to watch out for there will be the Fed chairperson's Jackson Hole speech that will take place later in the month. But earnings-wise, fag end of the earnings season, what are you making of it, and where do you really see the Nifty EPS heading in the coming quarters?
Yeah, Nandita, good afternoon. Markets are in a consolidation phase right now. Nifty, after touching 25,000 levels, what we are witnessing is some kind of profit booking, but the markets are going on strength to strength, quite strong. As you rightly mentioned, most of the big events have been done. So what we are waiting right now is all the global markets across the globe. They have been waiting for how the Fed action is going to be. What Fed has been doing in the past couple of quarters they have been buying time, and this is the time for them to deliver. Right now there was an uncertainty in terms of the rate cut is concerned. Right now it is becoming certain that by September, Fed is going to have some serious action in terms of the rate cut measures are concerned, most probably from 25 to 50 basis points. That is the expected rate cut one can expect from Federal Reserve. And post that, how RBI mentions today, we get the inflation data. So how are we going to respond to the global central bank actions? in tandem with the Federal Reserve Fed rate. That is extremely crucial going ahead. But coming to the earnings season is concerned, of course, we are at the back end of the earnings season. Q1 numbers have been good, but there are no negative surprises. At the same point of time, we don't have any positive surprises. But the point to ponder upon the Q1 quarter results are concerned, wherever we interact with the management companies, they have been sanguine about the future outlook. They are, from a medium to long-term perspective, next couple of quarters has been a very strong positive outlook in terms of the earnings season is concerned and margin improvement is concerned in the coming quarters. That's where the earnings upgradation we can, but but we also need to wait how the RBI action is going to be in terms of the India's growth story is concerned.
All right, that's the view on the market. But let's talk about the big news from today. The big Supreme Court verdict. Supreme Court has allowed states to collect past dues in the form of royalty and tax, respectively, from mining from April 2005. Right, no interest will be levied on past dues, and tax will be collected in a staggered manner. So it's seen as a negative read through for the likes of Tata Steel, NMDC and the likes. But what is the impact that one would envisage? Would it translate into a big hit for earnings, given the fact that the collection will now be in a staggered manner? So how do you really see the impact playing out on earnings?
Yeah, we need to consider two things from the Supreme Court judgment. One is it all spread across different states. So what is the each state policy? That also we need to consider, and what kind of impact it's going to have on the company earnings. At the same point of time, is the companies are going to absorb this cost, or they are going to pass on to the consumer. So these are the two things we need to wait and watch. So it is going to be by and large company specific, and also the companies in which state they are going to operate. They are going to have their mining licenses are concerned. So these are the factors we need to consider. Right now, definitely there's going to be some impact on the earnings of the companies are concerned. There will be a margin impact, but whether it is going to pass down to the consumer or the companies are going to absorb, and also how they are going to negotiate right now with the state governments. Now the ball is in the state government's court, how these companies are going to negotiate with the state governments. That is extremely crucial. We need to look forward for that outcomings in a company-specific manner.
Right, a company-specific manner. So Tata Steel had made 17,300 crore worth of contingent liabilities, right? Against claims by Odisha government. Vedanta has a big exposure to Odisha as well. So what is the kind of an impact that you would be envisaging for the likes of a Vedanta because of this retrospective tax? And NMDC, do you see some bit of impact there as well?
Nandita, on an across, definitely there's going to be an impact on the revenues, but it all depends upon which state the companies are operating, and how, when the Supreme Court said retrospectively on a staggered manner. So how the definition of the staggered manner is going to be. So these are the factors that are going to hit the margins of this company. So we need to wait and watch some more clarity with respect to this staggered approach is concerned. What percentage of payments they are going to negotiate with the state governments. So these are the measures. We need to look into that before commenting anything on these company earnings.
Sure. Kranti, but let's break it down between private companies and PSU companies then. What kind of an impact are you envisaging for PSU companies? Do you think the impact there will be lesser as states may allow them some leeway? For Coal India as well, there's incremental cess that comes in. Would that be a big negative?
Definitely, the impact is on a some extent, but it's not going to be a greater extent at this point of time. As far as it can be a PSU, it can be a corporate private sector company is concerned, but definitely it's going to have a similar kind of impact. Okay, there will not be any kind of exception with respect to the private sector or public sector undertaking is concerned. But how far these companies are going to negotiate with the individual state governments. That is extremely crucial going ahead. But definitely, what we can expect is somewhere around 1 to 2% kind of a revenue impact that's going to be there on these companies. This is not a ballpoint figure, but it is on a prima facie what we are getting at this point of time.
Okay, just one last question on this entire issue. Could there be an impact on cement firms as well? The likes of India Cements, companies that own limestone mines as well. Which are the ones that would, according to you, see an impact?
Definitely, Nandita, there will be kind of some kind of a ripple effect on these companies leasing licenses are concerned. But the point to ponder upon in this whole episode, whole aspect is how these companies are going to negotiate it with individual companies, individual state governments are concerned. That's the main crux right now in this entire Supreme Court judgment.
Okay, shifting away from the metals pack then, one stock that I want to get in your thoughts on is Hero MotoCorp. Numbers were below estimates largely because there was a one-off. The EV segment impacted EBITDA margins by somewhere around 200 basis points. But the company itself has said that it has seen a sharp recovery in its entry segment and is hoping and gearing up for a very strong festive season as well. And there are some exciting new launches lined up as well. What's your view? Is there an investment case in a Hero MotoCorp, or would you look at a Bajaj Auto in comparison, because they've also launched the world's first CNG bike and they've also got some exciting launches lined up. So in terms of a vis-a-vis Hero or Bajaj post the earnings, which one would you prefer?
Yeah, it's very interesting. Bajaj have a different strategy right now. They launched the CNG, but how the entire sales episode is going to pan out in the next couple of quarters, that is extremely crucial for Bajaj. The other hand, Hero has been one of the strong performer. The stock has performed very well in the past 18 months. Going ahead, the EV theme playing these companies, and right, both the Bajaj as well as Hero is concerned, they don't have any strong commandable presence with respect to the electric theme is concerned. So right now we have another stock in this electric theme is concerned. Ola is listed on the exchanges, and there is interesting to think how all this whole episode is going to go up, going to emerge in the next coming few quarters. Right now, the rural incomes have been quite strong, and we had a very good ongoing good monsoon that will increase the earnings of the rural India is concerned. So definitely, we have a positive stance with respect to the two-wheeler sales are concerned. But here, the joker in the pack is how this EV theme is going to emerge, and Bajaj they have the theme of new CNG, how it's going to emerge at this point of time. They launched with a big bang, but we need to closely track how the sales numbers are going to be and how the incremental gain of the revenues from this segment. These are the points we are keenly watching at this point of time. But on a longer term basis, Bajaj and in our pecking order, Bajaj and Hero Honda Motors remains our favorites in terms of the two-wheeler segment is concerned.
Okay, Bajaj and Hero Moto remain the favorites where the two-wheeler pack is concerned. But let's talk about Pam Enterprises. Numbers came out. The stock reacted very sharply. It was 10% lower today, and CLSA has also downgraded the stock, saying that it expects pressure on both growth as well as credit costs. Are you expecting earnings recovery to be slow for this particular company? The stock has also not done all that well. If you look at the monthly charts and, last 3 months, it has not
Absolutely
really done well.
right. Yeah.
So going forward, what are you?
In terms of the stock has been a laggard in terms of the stock performance is concerned. But right now they're setting up their the NBFCs and the business is concerned. Thermal Financial Capital is concerned. Their HFC. So still they're at a nascent stage in terms of their setting up the retail franchise is concerned. So they have still some kind of gestation period, some kind of earning pressure is going to be there for Piramal Enterprises at least next couple of quarters. But in terms of the management quality and how the way they shape up the things with respect to Ajay Piramal capabilities, what we witnessed in the past 3-4 decades, investors with a longer term horizon who have patience, one can keep the stocks like Piramal Enterprises during these kind of phases, given the kind of the long-term approach for these companies are concerned. One rate cut, most probably they can create some kind of increase their interest rate margins, so that can give some kind of for support for these kind of new upcoming NBFCs are concerned. Still, it is a new kid on the block with respect to the retail lending is concerned at this point of time. But we need to closely observe how things are going to pan out in the next couple of quarters with respect to Piramal Enterprises is concerned.
Mm. Right, one stock that I want to bring your attention to is Masco Dock. It reported numbers just a while ago. Stock was reacting to it as well, 3% up, strong margin growth and profit has doubled. Stock has of course corrected from highs, but despite that, our valuation is looking pricey because if you look at the stock as to how it has performed from June lows, it is still up 90% or thereabouts. So what are your thoughts? Are valuations still out of whack?
It's very interesting, Nandita. If you see how the stock performance is last 24 months, the stock has been one of the key performer, and it's a multi-bagger for the majority of the investors who invested in the range of 400 levels. And stock has rallied is phenomenal. It is one of the key stock in terms of the defense sector is concerned. So the earning visibility is quite strong for these companies, and also look at their margins and ROE that are extremely good. So right now it is at a pricey valuation, but any dip in this kind of stock, the stock was in a consolidation from last one and a month, and from that after the results, the stock has given a positive breakout at this point of time. Definitely, investors with a long-term horizon, one can hold on to this company, and still the stock can deliver mid-teen kind of returns from these point of pricey valuations also. So one can add these companies at any dip, given the kind of strong order book visibility and also earning visibility is concerned.
Right. Couple of more questions, Kranti. How would you really look at an HDFC Bank now? We had seen the stock starting to outperform, or starting to perform rather, but yesterday, of course, there was this MSCI news that they will be increasing the weight in 2 tranches and not in one go, as the street was really anticipating. Is that a big dampener? How are you envisaging?
I remember a decade back when a foreign investor want to buy a bank like HDFC Bank, they have to wait in queue to get their quota because the allowable RBI permissible limit is concerned that used to choke. So they used to wait for weeks and months to get HDFC Bank. Today, after this mega merger of HDFC Bank, the stock has been a laggard because of the overhang of the earnings that's playing spot for this company. But given the kind of the strong pedigree the bank enjoys, and also the banking is considered to be one of the key epicenter of growth. So investors with a long horizon definitely can add HDFC Bank at every dip, but testing the patience of the investors, still the merger yields are yet to manifest in terms of the earnings are concerned. So we are a net buyer with respect to the HDFC Bank is concerned. In our long-term core portfolio, HDFC Bank remains the priority despite tough performance. What we can expect from the next couple of quarters, some kind of outperformance. As you rightly mentioned, the MSCI flows are concerned, that's going to add some extra cushion uh, for the flows are concerned into the uh, uh, in the medium to short term. But the main important thing for HDFC Bank is the earning revival. That is extremely crucial for HDFC Bank. Investors with long-term horizon, definitely they can add HDFC Bank at every dip.
Right, okay. Investors can look at adding HDFC Bank on dips, but which are the other pockets that investors should look at now? Pharma has been doing well of late. FMCG, of course, ever since we saw that election verdict, FMCG has also managed to come back into favor, and we have hopes of an above normal monsoon playing out this year as well, right? So, which are the pockets that you would really advise investors to look at now?
In a medium to short-term perspective, pharma looks interesting because of the relative valuations of pharma stocks are looking very attractive. FMCG, the same case, given the kind of the strong emphasis with respect to the rural consumption theme is concerned, and we are having a good monsoon. So the FMCG is one of the pack where the relative valuations looks very attractive. But definitely, despite of uh, uh, higher valuations in defense, uh, uh, given the kind of the outlook for defense stocks, earning visibility, one can add these stocks at dips, but it can be more stock specific market rather than a sector specific market going ahead. So there are ample opportunities. Buying value in these kind of markets is extremely crucial. And the point to consider is we had a strong IPO season also. There are some new different business models are emerging in the secondary market. So one can look at names in the secondary market also at this point of time, where we are witnessing a strong earning outlook for these companies also.
All right, that's the view then. But with that, I'm afraid we are running out of time. Kranti, I would like to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Always a pleasure, and I look forward to interacting with you soon enough.
Thank you. Always pleasure to interact with you.
And of course, wishing you a very happy Independence Day as well.
Thank you.
All right, then, with that, of course, we've come to the end of this edition of Closing Bell. Extremely flat session. We've ended below that 24,150 mark. But of course, it's a day-long break tomorrow, given the fact that it's our Independence Day. Friday, of course, we'll be back with opening bell at 9 a.m. So don't forget to, log in and tune in rather with your queries and all the stocks that will be in focus. We'll see you then on Friday. Thanks a lot for tuning in right now, and stay tuned to Money Control for all your other news and updates. Thank you.